What's up guys, this is Muhab, and Tesla has beaten analysts' estimation in the fourth quarter of 2019 just like they did in the third quarter of 2019. And at the time of recording this video, the stock price reached a value of $484, and at some point it almost reached $500. The stock that was at mid-hundreds before 6 months is now trading at $484. For reference, that is around 3.5x its price 6 months ago. Just let that sink in. Now the question is, can Tesla 2x before the end of this year? Let's run the numbers to find out, but before that, get your cup of coffee, smash the like button, and let's roll the intro. First, let's talk more about the fourth quarter of Tesla and the overall performance in 2019, and then extrapolate for the year 2020. One of the most important pieces of information being revealed is that the firm made 112,000 deliveries in the last 3 months of 2019. According to CNBC, Wall Street had expected Tesla to deliver 106,000 vehicles during the same quarter. As a response to this overperformance, the stock price is currently up more than 3%. Well, 3% at the time I wrote the script, now it's much higher than that. Of the 112,000 deliveries, Model S and Model X vehicles accounted for almost 20,000 deliveries, while the Model 3 accounted for a astounding 92,500 deliveries. On the production side of things, a total of 104,891 vehicles were produced, 17,933 were Model S and Model X vehicles, while almost 87,000 were Model 3 cars. With these figures factored in, 367,500 vehicles were delivered to customers in the year 2019, representing a 50% increase over the previous year, which was already greater than the year before. Tesla needed to deliver 104,000 cars in the fourth quarter to meet Musk's 2019 forecast of between 360,000 to 400,000 delivered vehicles. So not only they have beaten analysts' expectation, but they also met Elon Musk's forecasts by delivering 367,500 cars. So what do we get from all of this, and how does that tell us if the stock will reach $1,000 by the end of 2020 or not? It all comes down to the trend. The trend of underpromising and over-delivering always boosts a stock price. That's how the stock market works. If you believe a company is going to do it at this level and it does even better than what you expect, that means the company is going better than what analysts are expecting, and as a result, the stock price grow. Back in the day when Elon Musk used to overpromise and underdeliver, the stock was suffering. But Elon Musk did that to push the boundaries of innovation and to produce more. He follows the quote, "Aim for the moon, if you miss, you land among the stars." That works perfectly if you're an engineer, and it did help Tesla's engineers to innovate and produce more. However, that does not work with the stock market and stock analysts. An example of overpromising and underdelivering was back when Tesla released its second quarter report of 2019. Its revenue and earnings per share were less than what was estimated by the analysts, and the stock price fell by 10%. In the third and fourth quarter of 2019, Tesla has been delivering and making revenue more than what analysts are estimating. Thus, we saw the huge jump in price. But can Tesla do that in the year 2020? Well, I wish I have the crystal ball with me right now to answer your questions for sure, but it seems that Tesla has a great 2020 in front of it. The Shanghai factory car production, Model Y, semi-truck, robotaxis, insurance, Gigafactory 4, and the whole energy sector to play with. In fact, regarding the Shanghai Gigafactory, Tesla said the following in its fourth quarter of 2019 report, quote, "We continue to focus on expanding production in both the US as well as our newly launched facility in Shanghai. Despite breaking ground at Gigafactory Shanghai less than 12 months ago, we have already produced just under 1,000 customers' saleable cars and have begun deliveries. We have also demonstrated production run rate capability of greater than 3,000 units per week, excluding local battery pack production, which began in late December." End quote. If the Shanghai factory started operating at full capacity, it can produce at least 144,000 cars per year, and that will result in great profits to the company. Not only that, but also there is a leak that says Tesla is testing a new Model S version, and if that is true, then Tesla may surprise us with a new car in 2020, just like it did with the Cybertruck, and that will probably mean Tesla stock will see another jump. Also, according to Elon Musk, we should see some robotaxis rolling by the end of this year or the beginning of the year 2021. I made a whole video talking about Tesla's Shanghai factory car production, Model Y, semi-trucks, robotaxis, insurance, and the whole energy sector, and how much will each be valued by the end of the year 2023. I gave exact numbers there of the stock price as I was using estimates that was made by analysts, so feel free to check the video by clicking the card at the top right of the video. In addition to all of that, analysts are turning 180 degrees on Tesla and they are becoming bullish on the stock.
I'm dumbfounded too. Dumbfounded that Tesla stock hasn't gone even higher. Why? Because the stock market loves growth, and this market in particular can't get enough of it. This is a chart of growth, people. Tesla has growth in spades. Of course, investors will pay up for it. GM has barely any growth. Ford's actually shrinking. Nobody wants to pay up for stagnation. Plus, Tesla's got a rapidly expanding business in China, which is all the more impressive when you consider that Ford's China business is in big trouble. And GM just told us its Chinese business will be down this year. Just like last year, it fell 15%. People are mocking the fact that Elon Musk did a jig last night on the Shanghai stage where he unveiled the new cars. I say who can blame him. He built a new plant that can produce 150,000 cars, and he did it in just 10 months. Ford and GM will be struggling to get that similar plant up running in 18 months. They're more in the habit of closing factories than opening them. Even better, Musk says this new plant can get its capacity up to 250,000, maybe in a couple years. As far as I'm concerned, the guy can dance naked after those accomplishments. I don't care. More importantly, though, these kinds of comparisons between the old guard and the new ones, worthless. Wall Street will always pay much more for fast-growing companies with fabulous prospects. The Ford and GM versus Tesla comparison is just a parlor game. Tesla's got electric vehicles. That's the future. GM has an electric vehicle that no one seems to want. Who the heck knows what Ford's up to? Who cares?
Also, analyst Jed Dorshimer raised his stock price target by 37% to $515 from $375, which means he believes Tesla's stock price will reach $515 by the end of the year 2020. He said, quote, "We believe the trend towards electrification will only accelerate in the year 2020, end quote. Dorshimer wrote in a note to clients, quote, "While bears have feared demand issues as a function of tax credit expiration for Tesla, we suspect a solid fourth quarter combined with a robust third quarter should put these fears to rest and put to rest this issue as the credit expires." End quote. All that sudden positivity from the stock market analysts boosted and will continue to boost the price of Tesla stock, especially after they knew the true value of Tesla and how all of their initial claims that Tesla will go bankrupt turned out to be absolutely wrong. I am expecting more analysts will become bullish on Tesla stock as they truly appreciate the true value of Tesla.
It would be $900 a share.
Okay, so like almost a double from here.
I think so, and this is not going to be a nice linear path there. There's going to be a lot of chop in there, but that's how these trends happen. And you talk about Craig talks about more competition that has been happening for the last few years, and Tesla's maintained their, call it 70% share in the U.S. That's going to decline over time, no doubt. But we're talking about 450,000 vehicles this year in a market that's 90 million.
In summary, Tesla has a lot of potential markets that it can tap into. Analysts finally started to realize that, and they started to raise their price target for Tesla. The bulls became more bullish and the bears became less bearish. It seems like 2020 will be a great year for Tesla. Is it a risky stock? Absolutely. The price of the stock could jump to $1,000 if more good news and good financial reports started getting released, and it could hugely drop if bad news started rolling. But at the end of the day, Tesla proved its profitability, strong fundamentals, and extraordinary future potential and growth, so in my opinion, if the stock didn't reach $1,000 by the end of this year, it may reach it by the end of the year 2021, and that would still be considered extraordinary growth. Alright guys, that's the end of the video. Please don't forget to like, share, and subscribe. If you're more interested in watching other videos, make sure to click on the cards in front of you. Again, don't forget to like, share, and subscribe. This is Muhab, and I am signing out.